Welcome to this tutorial on how to identify inflection points and price levels in stocks. So before we get started here, this is something that has taken me years to develop, and it's not something that is easily uh, teachable unless you've been looking at charts and studying charts for years. Hopefully, I can accelerate that learning curve by this video today. So typically, what I'm looking for when I am identifying horizontal levels of interest um, for for stocks and for indexes is the first thing I do is I look for areas where I've seen a lot of price history. So you can see, for example, this area right here has a lot of price history in here. So this is definitely a level of interest where people have gotten trapped long, have gotten trapped short. And so typically when price revisits these levels, these offer levels of support or resistance depending on the current trend. So I'm going to go ahead and remove this rectangle. And so typically what I'll do, the way that I start this out is I'll come in and I'll look at previous levels. So I can see if this area right here, there's been a lot of price action at this 721 area. You can see this was, resistance, broke out, came back, tested as support, broke down, came back, resistance, broke down, came back, and then finally took off. Okay, so this 721 on BlackRock is a very important level, in my opinion, just because we've seen a lot of previous price histories. So another area that catches my attention is just below it. So this area right in here is another level that I would classify as an inflection point, a level of interest. And you can see this was a wick that got rejected, finally broke out, came back, tested as support, and support once again. So this 692 is also a level that I would be paying very close attention to if price ever came back here, right? And so then what I'll do is I'll continue this exercise until I identify the majority of levels that I have seen previous price histories. Now you don't want to clutter your screen too much because then you're going to have levels all over your screen and it's going to confuse you if this is a level of support, level of resistance. But just another level that I am identifying right here is this level right around this 886 area would be another potential level for me. And you can see it's knocked at, we've had some price history knock on this level here, broke out, came back through here, and then finally we broke down on BlackRock through that level right now. So this I'll just continue to this exercise until I feel like I've gotten the majority of levels. So this would be another level for me, this 866. And so what I'm trying to do is I'm trying to, make these horizontal lines interact with the tops of candles, the bottoms of candles, candles where, price has opened or closed. So that gives me an idea of where price can go. So after I've gone through this exercise, then I will go back and I'll do Fibonacci retracements or Fibonacci extensions, depending on, if I'm looking for an upswing or a downswing. So here we'll do a Fibonacci retracement. So I'll take it from a previous pivotal low to a pivotal high, and I'll come in here and you can see the 382, 618, 786. I'm almost always going to have these levels on my charts, depending on where I've drawn the Fibonacci extension or retracement from. So this 618 would likely be a level of interest, which nicely coincides with this 780, which happened to be a previous top. This 382 nicely coincides with some very important levels that have the prices rebounded and gotten rejected from. And then this 786, it's close enough. This 732 is close enough to the 721 that I probably wouldn't put that in there unless I was trying to get really granular. But just for the purpose of this exercise, we'll draw it in. And you can see after doing that, we got a couple more levels in here. And you can see this 786 retracement is happens to be a very important level of interest. You can see price has interacted with this level quite a bit. You can see this 618 retracements, this 780 level happened to be a previous high and then a breakout level. So that's definitely something I'd be keeping my eye on. And then this 948, which was the 382 Fibonacci retracement, happened to be a level that price rebounded from quite often. So these levels, the reason that they work is two reasons. Number one is because of just natural laws in the universe of Fibonacci and ratios. So 618, 786, 0.382, these are natural ratios that repeat themselves throughout the universe. And so these same ratios can be applied to markets. And then also price levels that are inflection points where lots of trading history has happened. So it's not rocket science, but it is definitely an art. I'd probably put a level right in here because this was a previous breakout, and you can see a lot of price action has happened in here. And so now we've got some levels in here, and you can see this area as well. This range in here has a lot of price history. So that's, be an area that I'd be looking to put another level on. And so if I just kind of take my right in there, so 827, you can see previous high, breakout, support, and then took off. So now we've got some levels in here. We've got some areas of interest. We've got some price levels that if price is going to come back down further, we know areas where we should be considering taking profits if we're short. And we also know areas where we could potentially see prices to bounce. So this is how I typically execute these. As always, it starts with just simply, zooming out, looking at the chart, identifying previous levels of price history, and then trying to make horizontal lines that touch or interact with these levels as many as possible. So we've got a level here and here, and then we've had some previous levels in here as well. And then after I go and do that, I'll go and do Fibonacci retracements from previous pivotal lows to pivotal highs, and that's pretty much the strategy. And like I said, this is definitely an art. It takes a lot of understanding price structure, price patterns, and looking at charts. And hopefully this video is helpful and useful. If you guys have any questions, please feel free to send me an email. I'm happy to help. Take care. See you on Monday.